Hello everyone, and welcome to the Be Brilliant Everyday Show. More people and businesses are transforming and inspiring their local community and people around the world to lead better lives and make more money. On this show, we sit down with these brilliant people to discuss their ideas, strategies, and the opportunities they're taking advantage of so the rest of us can do the same. Please welcome your host for today, Simac Konkader.
On today's show, we are going to talk about wealth management with Sukaina Karim-Hussein from SKH Wealth Management. She's an expert in her field and she comes from the British multinational wealth management company, St. James's Place. We will be talking about wealth management both for businesses as well as for individuals, and along the way we will share a few tips which you can implement straight away. So Sukaina, welcome.
Thank you so much.
Excellent. So tell me about your area of expertise.
So my area of expertise is really helping people to set their financial goals. And that's the building block of what I do. So the types of people I can help are individuals for their personal finances and companies for their company finances. So specifically in the middle, you've got a group of directors who need help on both the individual and the corporate side. So what I help people to do is set their goals for their businesses as well as how it works personally. Most of us go to work and we can manage our workload, and on a daily basis we go through the things we need to do. And when we come home, we're tired. I help people manage all of their financial goals, set those for themselves, and really help them keep on target to reach them. So that's really what I do. I give them advice, I partner up with them, and I help them get to where they need.
Excellent. And how has it been coming out of COVID? What have you seen the kind of trends coming out of COVID right now?
Well, it's really interesting because a lot of people chose to take retirement early.
Right.
Which, there's a new terminology now, it's called phased retirement, which
Phased
means
retirement,
you
okay.
partially work and you partially retire.
Okay.
And a lot of that came out of COVID and when people had a lot of their time back personally. And you see a lot of that happening. We've also seen inflation, shoot through the roof post-COVID with the war. It means that you've got interest rates that are going up, you've got mortgage rates that are going up, the cost of living has shot through the roof, oil prices, gas prices. People are worried. What I help people do is try and beat inflation. Inflation is very high.
Right.
So keeping your money in the bank, sadly, you're eroding what you've got in the bank, or eroding that particular cash investment. So I'd help people to beat inflation, if that's what they want to do. They take their savings and you take a long-term view on these things. So actually, Simac, if you don't mind, can I show you something on
Yes, go for
a
it.
little bit on it, how investments work? So
Yeah, go for it, Sukaina.
I just want to show you, this is actually a chart from 1987 across to post-COVID. Now you can see that you've got the COVID dip there.
Right.
And often if you see there's general recoveries, you've got the 2008 mortgage crisis, you've got another war here, you've got the invasion of Iraq, you've got various dips here, and if you can see looking back, these dips turn into much smaller troughs with time, because what happens over time, you've got inflation, you've got cash, that's effectively interest rates, bonds, this is loans to companies and governments, equities, and this one is corporate property, so commercial property here. So if you have a look, if you put £100,000 in 1987, and you put that in your pension, you can take out around the 1.7, 1.8 mark today. That's above the lifetime allowance.
Wow.
But imagine just being invested in that time, especially in the equity market. So what you've got to remember is usually, inflation is a lot lower, so eventually you've got outperformance. And over time, even if you look here, there have been times where the stock market didn't perform as well as inflation, you might just be able to see it. I think that was around, if you look very, very carefully, that was in 1990. Over time, it all evens out.
Got it. You mentioned having cash right now is not the right thing to do, to invest it better, right? I've heard cash is king, while in a recession, cash is crap, for want of a better phrase of putting it.
So, we're not saying invest all of your cash, you've got to have emergency funds. That's one of the building blocks of planning. You've got to make sure you've got enough to ride through a storm. But sitting in cash, which a lot of people at the moment try to time with the market, so they want to know when to get in and when to get out. timing the market is very hard, but to time in the market is how long you've been in it. That's ultimately where you can grow your wealth. So, you keep a portion of money aside for your emergency funds, and then the whole point is, you try and outpace inflation, because, if you're just running at this level, you're not growing your wealth. Your money's not working. You're the one working.
Exactly.
Your money's sitting there.
Fantastic. And when for individuals watching this particular podcast or show, at what age would you expect them to generally that you see them coming in to meet an advisor like yourself?
So people don't tend to want to meet an advisor until they have responsibilities. So there are the main times, which is buying a house and having a family, or when they want to retire, thereabouts. That's when you see people, there's a usual spike in activity.
Sure.
But where you should really think about this, and this is really, I don't anticipate many 20-year-olds watching this, but if you have a 20-year-old at home, or if you have someone starting work, take financial advice early. Putting money away into your pension early. You've got a lot of tax savings with that. The government gives subsidies for that.
Correct.
The reason being, our national insurance contributions pay for our state pension. We've got to invest ourselves if we want to have, the kind of lifestyle that we might want in the future. Making, with your first paycheck, take some money out, put it into a pension, take some money out, put it into an ISA. Have those set up regularly, that when it comes to, you're looking at 37, 38 years down the line, that's you.
Exactly.
And that's not you. Yeah. And I would suggest come in early, but those tend to be the times that people come in.
So the guidance for everyone out here is, if you're coming out of uni and you start working, so if let's say for example, if you're 25 years old and you would have invested X amount, so in 35, 37 years you'd have had a nice rich pot of money, which would make you around 55, 60 in that range, right?
That's absolutely right.
And that's a fantastic way to build for your retirement and make a more promising future for yourself.
Absolutely.
Now, why is it important for businesses also when it comes to wealth management?
Well, what people don't understand when they run a business, actually they do understand something when they run a business, because they're focused on their business survival.
Correct.
And that's the general objective of any business owner. They live and breathe their business, and they have their family in the evenings and weekends. And they're tired. They're not setting their personal goals alongside their business goals often.
Correct.
And you've got to align those two, because you're working because you enjoy it, but you're working because you want to generate an income as well.
Sure.
So it's quite important for business owners to remember that there are many ways for them to look at maximising the use of their business when it comes to tax efficiencies and investments. So just to give you a couple of ideas,
Sure.
A lot of business owners, you've got some really young ones as well,
Right, yeah.
but you've got ones that have dependents, that have loans, that have mortgages, and they tend to have life insurance plans. And they may hold them in their own names, but there's lots of tax advantages for them to hold it within the business.
Right.
Now, we've recently had the social and healthcare tax, which you're aware of. So you've got the social and healthcare tax, which has just gone up. So there's an increase in national insurance contributions. If you hold a life insurance plan within your business, and you are the key to your business anyway, it's tax deductible. So you've got the corporation tax relief. You don't pay benefit in kind, so you've got the income tax relief, and there's no national insurance contributions. It's so tax efficient to move something like that into your business. Similarly, when you are self-employed, you're a business owner, you don't have a sick pay mechanism.
Yes.
So one of the things to think about is income protection. And people are thinking, income protection is expensive. Yes, it can be, but you can limit a payout on income protection as well.
Okay.
And similar to life insurance, if you hold it within the company, you've got a lot of, sort of tax efficiencies within that, in terms of the national insurance, the income tax, and the corporation tax on the premiums as well. So these are sort of certain things for business owners to think about as well. But one of the most important things I want for business owners to think about, when they get to a point where they've paid themselves and they've got a bit of surplus cash, what do they do with it? There are various things. So the first port of call is extracting out your pension.
Right.
So you're only going to get the state pension because you're not auto-enrolled somewhere like individuals who are not running businesses. So one of the things to think about is to set up a pension, profit extract into your pension, and again you've got it's corporation tax deductible, no national insurance contributions on that money, and also, income tax deductible. You don't pay any income tax on that. So you're extracting that out into your pension, and that's also a good IHT vehicle, inheritance tax vehicle, if you wanted to use it for that.
Understood. And I believe that coming out of COVID, I think a lot of individuals have started their own businesses and they're not aware of all this. So I think that's a very good set of tips out there. Now, also speaking about business owners, right? They all have employees in their company. So what is some of the typical things that you have done when working with such business owners?
With their employees, well, you've got firstly, you've got auto enrolment that you have as an obligation towards your employees. So, you can set up with, some of the government schemes or some of the other schemes, but one of the things to think about is how you set up your pensions.
Right.
Because if you set them up and you don't do something called salary sacrifice, you are effectively paying out national insurance contributions that you could be clawing back for your business and your bottom line. So thinking about how you set up the scheme at an early point is very important. And if you've already got a scheme set up, that's something you can always look at. You can always change schemes. It's not an issue. One of the other areas, you've got employee benefits that you can think about as well. So, a lot of people do want to offer, especially post-COVID, sort of a death in service scheme now.
Yes.
So, you've got you've got the tax efficiencies around death in service and the premiums, especially group death in service. Private medical insurance, this has really come to the fore around the time of COVID as well, because, with the NHS so backed up, I've had a lot of inquiries about people saying, well, what about private medical insurance? What can we do about that? How can we help our employees with that? And there's, there's some tax efficiencies for the employer on private medical insurance too, and the employee does have to pay, income tax on that and national insurance contributions. But, for the employer, there's certainly some tax efficiencies there as well. You want to retain your workforce. Exactly. They're your capital in your business.
They're your assets, right?
They are your assets, and you want to invest in them as much as you invest in your business and yourself. So it's really important to make sure you're offering them something that will sort of enable them to work with that peace of mind, and gives you the peace of mind back. So there's a lot you can do there when it comes to employees and sort of auditing, what you can offer them and what your employees need.
Understood. So who influenced you to get into this field?
That's a good question. I was going to say Charlie Sheen from Wall Street. Not quite really. That's not how it is here. But, I came out as a graduate. And I was actually on the UBS grad scheme in wealth management.
Oh, wow.
About 21 years ago. I'm giving away my age. I can't remember exactly who it was that influenced me to do this, but I know what I've always loved about this. And it's the fact that I get to help people, and it is very people focused. But at the same time, I can use those analytical skills. I can take goals, I can take a financial situation, I can go away and come up with a solution for someone, and help them through that. And that's extremely rewarding. There's an element of being able to help people that pushes the endorphins up. And that's just really what I love about what I do. It's the human interaction of it, making sure that people are, they feel comfortable, they've got the peace of mind, they feel secure with the advice that they've got.
Excellent. And what's the biggest challenge you're facing in your business right now, and how are you tackling it?
Well, one of the biggest challenges is when I speak to people and say to them, well, look, this is what I do. And they say, oh, what return can you get me? And, wealth management, financial planning is about the individual and what goals they want to set. So first and foremost, what do you want is my question. What do you want? So one of the biggest challenges is explaining to people that it's not necessarily about sort of, 200% return this year. What do you need and what do you want? Let's get you there. And then, when they say, oh, my neighbour, he invested in such and such a scheme and he got this. But did he tell you how much risk he took to get there? So, a part of the education here is explaining to people that goals are set, risk is evaluated. I guide you on that because I don't want you to take more risk than you need to take.
Understood.
It needs to be what works for you. So one of the challenges is explaining to people when you meet them that it's not about sort of, just shooting for the stars. What are you willing to give up to get there? Because that pleasure of the 200% return could have had a 200% loss. And are you comfortable with that? So, that's one of the challenges that I do face. People are open to help and people are open to goal setting. But everyone wants the highest return that they can get.
I can imagine, right? Obviously, when they come to someone like you. And what personal values are important for people when it comes to wealth management?
So, in terms of personal values, I would say that people need to, want to goal set for themselves.
Okay.
They have to want to, go through the process. Everyone I meet has a need, and I speak to them and I can identify that need. Does it mean that we're going to do something? You yourself have to be comfortable with that, and that's where it starts. So when you go away and when you think about it, if that's important to you today, right now, in the current moment, then we can do something. That goal might become more important to you later on, and then we can have a conversation about it then. But that tends to be, at the moment, when I speak to people, everyone has goals that they can set, everyone has needs. It's whether it's the right time for them and whether it's on their agenda right now.
And also their risk appetite, right?
Of course, it's their risk appetite. And, for a lot of what I do, it's not about increasing their risk. Actually, what I'm trying to do is manage the downside. I always start with that. Like, let's see, what are your current risks? Let's first manage those. I want to limit those risks for you. And then we can help you grow your wealth, because there's no point in me growing your wealth and keep all the risk open.
And generally, so assuming you start off a client of yours, how often do they... let me put it this way, how often do you meet up with them during the course of, let's say, 15, 20 years, and how is it done?
So, annual reviews are sort of always on the agenda. I would always contact someone and say, would you like to come, would you like to come in, shall I come out to you?
Okay.
Should we review your goals and review the progress of your investments or your pension or both? Some people are more keen to have that conversation, some people aren't. When I'm onboarding clients, I tend to have a lot more contact with them, obviously, because I need to understand them very well. I want to make sure I've got their goals set properly, I want to make sure that the advice is fit for purpose, and I want to make sure they're happy. And also, it is a people-focused business. So I just, that's how I grow my business, is through word of mouth, it's through referrals. So I also want to make sure that everyone who works with me is happy with what they're getting, because they are paying for a service at the end of the day. So it's usually on an annual basis, but if anyone needs, to reach out, a lot of questions right now surrounding when's a good time to put more money in. I've had a lot of that. I've had people say, my pension pot, it's not looking great. But you can't access it, so just don't look at it for a little while. That's one of the things. Sort of. If you can't access it, it will. Like I said, it will ride the storm. I've had lots of people contact me and say, when should I put more money into my unit trust? When's a good time to do it? And a lot of the time I say, well, let's drip feed it in, because you're actually, you're something called pound cost averaging. Let's drip feed it in. Contact me anytime is basically the answer.
Good. What's your favorite productivity hack for businesses?
My favorite productivity hack? Oh goodness. Okay. So, I think I may have touched on this a little bit, really, how to, with the best ways for tax efficiencies and sort of the income protection and the relevant life planning and pensions, things like that. But what I would say, for directors, for owners of businesses, is you are so focused on your business, and you are the expert in what you do.
Correct.
Taking advice on the business finances and the business financial planning, you have an accountant already, they help you. There are professionals, there are specialists who can do that. So I guess one of the hacks is you focus on what makes you your money. Let somebody else help you worry about the rest.
Good stuff, yeah. And I think for entrepreneurs who are starting off, or business owners who are starting off, one of the key things is they don't have much money, right? And doing something in terms of wealth management, what's your kind of view on that?
So initially, you start out a business, and especially all these little fledgling businesses, within a couple of years, are already able to look at the relevant life planning and look at the income protection planning, because in a couple of years, if you've not got back the money to sort of pay bills, you want to start thinking about how this business is going to make it.
Yes, exactly.
So right at the beginning, if you're going to start out, I understand, the money has to go back into the business.
Correct.
But you are part of that business, and protecting you is important, and protecting your family is important. So one of the things I would say is within a couple of years, I noticed that most people are in a position to be able to do that. Profit extraction often comes at around that time as well, where they can start extracting out a little bit.
Right. Okay. So it's as soon as you start making some money and so you've reached that point in your business, you should actually look at managing your wealth around in your business very well.
Once you've paid your fixed costs, you've paid your variable costs, you've paid your own personal bills.
Sure.
When you've got a little bit of cash in the bank for your business, because that needs emergency funds, this is where you start looking at planning for your business early on, because you may want to pass it on to your kids, but most likely you'll want a business exit at some point. Let's make you efficient for the business exit too.
Exactly. And this you will see also typically in family-run businesses, right? So where the parents want to pass it down to their children and how they do it. So there's different vehicles to maintain that too.
Yes, I mean, trading businesses will pass down without inheritance tax issues in any case, which is great currently. But if you are thinking about a business sale or part of an arm of a business, you've got to start planning that early. So there are efficiencies around that.
And what one lesson you have learned in your job right now that you think everyone should learn at some point in their life?
I think there are two.
There are two? Okay.
There are two. Your goals are personal.
Right.
Your risk is personal. And therefore your portfolio should be personal. And any advice you receive should be tailored for you.
Excellent.
Sorry.
No.
A lot of people think that wealth management is DIY. We can get onto a platform. There are lots of things you could miss doing that, and then there's nothing wrong with going onto a platform. But what I like to make sure is that we're capitalising on every efficiency we've got, and we're trying to get the best sort of return as well for that. And I know we've touched on it before. The other thing is start early. Proof is in the pudding.
Yeah, absolutely. And top 3 reasons clients work for you?
Top 3 reasons clients work for me, not top 3 reasons I work for clients. Oh wow. I would say, my best clients are the ones who are actually open to taking advice.
Okay, open-minded.
Open-minded. You've got to want to make the change. You've got to want to break that cycle of sort of focusing on other things.
Right.
You've got to want to, a lot of people who come to me actually say to me, I don't actually understand markets. And one of the things I do right at the outset is to speak to them about the markets and what the various things are. So being open-minded again in that perspective to want to learn. And I guess the other one is, top 3 clients, I get on with them. We trust each other. I trust them and they trust me.
So it's a no-like trust.
It is a no-like trust, and I've had clients who write me reviews that brought me to tears because I didn't realise I had that impact on them. So, thank you to them.
Excellent, fantastic. And where can people go to contact you?
I have a website. You can find me on LinkedIn.
Okay, excellent.
Oh, sorry, wrong page. I don't know what I'm doing anymore. What happened to my page? Okay, there we are. Okay. This is where you can find me on, there's a website. I'm a partner at St James's Place, so I have a practice with them. And you can also find me on LinkedIn or through Simac.
Excellent. And before you go, what is the one thing you Googled today?
What was the one thing I Googled today? Oh my goodness, good question. I haven't Googled any. Actually, I haven't really actually Googled it, but I did want to show the graph that I showed you, so I had to look that up. I did Google I'm Wordled this morning.
Good stuff, excellent. For people who want to follow your career path, how do they start off?
Well, actually, St James's Place has an academy.
Oh, does it?
Yes, it does. So just to give you a bit of background on myself, although I started out 21 years ago, I left the banking industry altogether at one point, and I worked, I was in the property business for about 15 years, while my children were younger, doing project-based businesses. So I understand what business owners go through. I have been a business owner and I currently am a business owner. So, there's a lot of synergies in terms of the experiences as well.
Sure.
But SJP has an academy, and, I came back into the industry through this academy, and they support you through exams should you need them. And they also support you through, sort of clients, and there's a lot there in terms of how you want to help your clients best. So they'll give you the advice on that as well, and they'll help you. So one of the things I would say is check out the academy at SJP. Amazing. Big plug there. But also, you know, for people who do want to come into the industry, I started out very young. And my advice to very young people who reach out to me is, if you want to be in the industry, maybe start on something else.
Right.
You know, maybe start in investment management, maybe start in another little area, and then move across to the private client space, because you need to have some life experience to do this as well.
Got it.
And it's very hard to do that when you're fresh faced out of university, and your advisor proof a lot.
No, valid point. Excellent. Thank you very much, and for joining us this week.
Thank you so much. Thank you for having me.
Thank you, everyone.